Hello, this is an introduction to accounting. And in the beginning, let me tell you there is a microphone problem. Hi, this is lesson one, an introduction to accounting. In this lesson, it's a very short 5 minutes lesson, and here you are going to see three basic terms of accounting. I'll explain this: assets, liabilities, and capital. In India, we call it capital. Outside India, it is equity, assets, liabilities, and equity. First, let us see what is asset. To understand assets, okay, definition: asset means items of value which the business owns or possesses. Okay, forget the definition. I'm not teaching the definition here. I'm just telling you what it is. You can understand assets from examples. Best example is cash. An asset is money in different forms, in different items. Okay, cash is one form of wealth. So if someone asks you how rich you are, or you want to find out how big is the business, what we usually do is to add up all the assets they have, the value of buildings, bank balance, machinery, add them all. Actually, what we are doing is to adding up the assets. So let us see the examples here. The first one is cash in hand. Second one is a customer who owes you money. That is also money. Next is furniture, fittings, vehicles. So these are all different forms of money. Machinery, buildings. These are all called assets of a business. So if you look closely at each one of them, you can see these are all different forms of wealth or money. This is your money. Car means it is your money. Machinery means it is your money in the form of wealth in the form of machinery. So asset is wealth in different forms. So adding up all these things will give you the exact total wealth of the business. Okay, that is the main thing. Now the second one is liability. Assets come into a business from two sources. One is the owner. Owner will put money. Owner will buy furniture and give it to the business, or from that money owner will buy furniture. So that is one way. Owner's investment. Or he can borrow. Outsider's investment. So wealth comes into business from two sources, either from a loan or an outsider, or from the owner. So business doesn't have anything of its own. Okay, following? Business has assets, but these assets either that belongs to the owner or an outsider. Means money comes into business either from the owner or from an outsider, and that money becomes different assets. Here you can see there are 1, 2, 3, 4, 5, 6. Big businesses will have hundreds of different assets. And now, if you want to know exactly what is the investment, what is the owner's portion in this, you have to see the liabilities first. Liability is the outsider. I'm just showing this centipede and crocodile and all that. These are the people who give us money. So your asset come from an outsider, because these are small nuisances. So that I use these nuisance creatures to give you an idea. Outsider's money is always trouble. So your own money is different. Now in this case, we have so many assets. say this is worth 10,000, and in that 10,000 someone has given you 2,000, or you have a bank loan of 3,000. So your own money is the remaining balance. Okay. Now let us look closely at this. So these are liabilities. Liabilities are outsiders who contributed money, or the money you borrowed from people. Okay. So total assets minus total liabilities is the owner's equity. So now we are learning the three terms, basic terms. Now the owner. Assets, liabilities, and the owner's investment equity. So there is a relationship between these three. Total assets come from liabilities plus equity. Let us see next. We call it balance sheet of a business. Now look closely at this. In this case, we have 700,000 total assets, out of which 300,000 came from outsiders. Now you know how much is the owner's investment in the business. That is 400,000, right? So we will just remove these zeros. Business has total assets of 7, and out of which 3 has come from outsiders. That means owner has invested 4 rupees, dollar, dirhams, whatever. So that doesn't matter. Okay, if your investment is total investment is 7, out of which 3 has come from outsider, so you know the owner's investment is 4. So you can make a connection between the 3. So total investment means owner's investment plus outsider's contribution, outsider's investment. 4 plus 3 is 7, or 7 minus 3 is 4. We call it accounting equation. You don't have to know this accounting equation. Just you need to know these basic terms, meaning of these terms. So if someone asks you how big is that business, you will immediately ask, okay, give me the list of assets. You will add up all the assets. Then, okay, tell me how much liability you have. Okay, deduct the liability. Total assets minus liability is the owner's investment. In this case, 7 million is the total investment, out of which 3 has come from outsiders. So the owner's investment is 4. 4 plus 3 is 7. 7 minus 3 is 4. Got the point? So that's all. Accounting equation is the equation that gives the relation between total assets, outsiders investment, and owner's investment. We create a statement showing all these things, and we call this statement balance sheet. So next time when you see a balance sheet of a business, okay, this is a big thing. When you see a balance sheet of a business, look for these 3 numbers. You will see hundreds of numbers, but they all come together, added up to these 3. Okay, they converge into, they comes together into these 3 main headings: total assets and total liabilities, and then owner's equity. That's all, and it is accounting equation. And now we have, after this, we have 2 more terms to know, and that is expense and income. You know it by just by looking at it. You know what is expense and you know what is income. Revenue or income and expense. So these are the 5 basic building blocks of accounting. If you understand, mainly you have to understand these 3 first. Balance sheet items: assets, liabilities, and capital. Once you understand these 3, now you have to understand expense and income. Without my explanation, you know what is expense and you know what is income. So once you know all these 5, Then we will go to accounting. Okay. This class is only just to give you an idea how we are building the accounting system. So we build the accounting system by using these 5 items. Assets, liabilities, capital that we see here in a balance sheet. And then there are 2 more items that is not appearing here. They are as expenses and incomes. And finally, once you understand these 5 basic terms, then we can think of accounting that I will do in the next class. Alright. Thank you for watching. Revise this again. Just don't try to learn anything else, anything more. Okay, this is very elementary, very basic, but be very comfortable with these basic items: assets, liabilities, and owner's equity, and know the relationship between all these 3 items. Total assets of a business is equal to the total liabilities plus owner's equity. 7 equals 4 plus 3. That's all. Thank you for watching. Bye. See you in the next class.